Good morning. Welcome back to Morning at 10 TV. My name is Malaki Villa-Odera. Now, on the solutions segment, we'll be carrying on that conversation that Andrew Chamagero had with you on the big question, why are people shunning away banks? Yesterday in the papers, on the Observer specifically, we saw Barclays Bank publish an entire list of dormant accounts. Of course, this is in compliance to the requirements of Section 119 of the Constitution that tells banks you need to publish these dormant accounts so that the owners can actually go and reactivate their accounts, failure to which now the banks, after the date of notice, will then hand over the balances to the Bank of Uganda. But that points out to a bigger problem. The entire list was from page 17 to 63. These are dormant accounts in Barclays Bank. Now, the big question is, why are you shunning away from banks? And in studios, I'm joined by financial expert, Dr. Jeff Nyangenya. Thank you so much for making time.
You're welcome.
From page 17 to 63. Number one, that points out to a bigger problem.
True.
Banks are not doing well. Of course, some are, but many are not. Financial institutions are struggling. Why are we seeing this trend, people moving away from banks, and yet we know it's not that everyone doesn't have money to save?
Thank you for this chance to discuss about the banks and how they're performing. On the onset, I would want to say that we have around 24 banks, commercial banks in Uganda, supervised by Bank of Uganda. Out of the 24, if you look at their performance in 2017 compared to 2016, 4 banks in 2016 they made a loss. And then when we shifted to 2017, they increased 4 to 6 banks. That's one aspect. 2, out of the profit which was made in the portfolio of the banking sector, it was around 770 billion. In the year 2017, as per statistics of the Bank of Uganda. Out of the 770 billion, 90% was from the 10 biggest banks in Uganda. Now, let's go back to the list published by Barclays Bank. It's a mandatory, as per the Financial Institution Act, as amended in 2016. It is required that if somebody has been having a saving account or a current bank account and it is and there's no activity on it in 2 years, the bank is supposed to transfer that account into a dormant account. Further, after 3 years, if there is no activity or somebody has not come and get some cash from the bank or reactivate the account, that account is supposed to be, the money is supposed to be transferred to the Bank of Uganda, so that Bank of Uganda can utilize it in the activities. Now, the question is, why do many people shun banks? One reason, which I know, is even corporate people, educated people, whom we think they should be knowing the benefit of the bank, don't do it. During Museveni's speech, you realized he said that if you come to Uganda and you want to look at literacy, you barely see none. That's what he said, if I quote him. Now, those people whom he's saying are illiterate, why aren't they going to the banks?
That's the big question, because the trend is worrying, of course, for financial institutions and commercial banks at that. Why are people shunning away? Is it something that the banks are not doing right?
My experience with the bank, there is a very big gap between the banking sector and the common man. For example, there are some banks, when you deposit some money, it's a cost. When an auditor asks for a confirmation, it's a cost. When you're applying for a loan, it's a cost. When you're withdrawing money, it's a cost. When anything you do with a bank, there is a cost associated with it. Now, me as a person, I would say, instead of me carrying 10,000 shillings, why don't I use 10,000 shillings for my food? So I'll do away with the bank. I'll go for another alternative. Why don't I put my money in mobile money or Airtel money or XYZ? The now new innovation which has come, somebody will get money without even touching the bank. There's PayPal, other financial innovations which have come on board. So somebody will say, instead of me incurring this cost originating from the banking services which I'm getting, I better hold the money and finish. Second point will be, where is the money? People don't have money. The economy is not giving us the money.
Yes.
That's number two. So I will prefer, I'll give you a good example. 5 a.m. at Kalerwe, one of the biggest markets in Kampala, or Nakasero, or Nalia. Which bank is open at that point?
None.
A common man, or that person at the market, wants to get the money, pay. In the evening, get the money, pay. Now, in the morning, when you withdraw the money, you're incurring costs. When you're depositing in the evening, you're incurring costs. The next day at 5, for example, if the bank was open and you want to pay that cassava person or that supplier of pineapple from Nuwero, you have to pay money.
So what you're saying is banks need to sit down and come up with solutions.
Yes. They need to understand.
For their clients.
Now, the most interesting part, there is some behavioral finance theories which have come on board. For example, banks need to understand why people from the West, if you give them money, they will behave the way they behave. For example, they will buy cows. Somebody from probably the East will do X. From the North will do Y. From the Central probably will prefer eating. Why? For example. So the bank should put a solution to that. And that's why you will see most or the biggest percentage of the population prefer circles or prefer a go or merry-round. You know, I give merry-go-round. I give you money today, next month, another person, the other month, another person. That means that in your budget of 1 million, for example, if you're earning 1 million, you cater for your taxes, probably 200,000 is for merry-go-round, and then the residue you're remaining with 500,000 is for your rent, it's for your food, it's for your transport, nothing for saving.
So what you're saying is solution number one, banks need to understand the behavioral culture of their clientele.
Correct.
So if they have a branch in the West, they need to understand how the people in the West operate and come up with solutions for people in the West.
In the West.
So they shouldn't copy every structure to every single bank.
Correct.
Okay.
People from the East, people from Karamoja, what do they want? How do they live? Why do they need the money? For example, the youth. I will guarantee you 90% of all university graduates, they have smartphones, if not 100%. And all of them probably, they don't have employment. Where have they got that money from to buy a phone worth $1,000?
Let me ask you, there's also this other notion that even the elite have. When it comes to solutions of online banking, of course, banks embrace this because of convenience, efficiency, that you can do your transactions without having to go to the branches. But the notion now is, how safe is my money? With cyber fraud being on the rise, all these other things coming on the rise, people are saying, wait, guy, I need my cash at hand. I cannot transact on the online platform. So with regards to that, because you know, at the end of the day, there are two sides to the coin.
True.
There's the issue of trusting the online space, but there's also this side of, fine, as a bank, we need to provide convenience to our clients. So how best can the banks just sort that out in terms of just reassuring their clients that, you know what, even if you go onto the online platform, your money is safe? How can they reassure their clients?
Two perspectives. Banks needs to go an extra mile and educate the people on the benefit of technology, which they have not done. It took me more than 5 years to appreciate banking, online banking, because you're not sure where your money is going.
And you see, you're a doctor with a PhD.
Just imagine. For you to be confident of this system, that I'm sending money, I'm approving it from somewhere, a bank is authorizing from somewhere, I'm withdrawing my money using probably an agent banker from probably Kapchorwa. For a common man down on the ground will ask, how does this money come from my pocket, goes to the bank, goes somewhere to Kampala, it comes through the air, and it reaches Kapchorwa? That's the thing which the banks need to do. Number two, people who are digitized, for example, are not that many. People who have money are people in the informal sector. We youth, we are putting on nice suits, nice shirts, nice perfumes. But do we have the money? Are we the one controlling the economy? People who are putting nice dresses, wake up in the morning, hard work, blah, blah. The banks need to give their own solution. Also, banks need to give a solution to the informal sector.
Okay.
The lady who is selling pineapples. I'll give you a snapshot. Boda man who wakes up at 5, probably takes a Taxify or a safe border. Those guys make money. How do they bank it? They need a solution. They need to be educated. They need to be informed. When a client pays you 10,000 shillings, this is how it goes to the bank.
So what you're saying is banks need to come up with a solution that is not just agent banking,
Yes.
Not just mobile banking,
Yes.
but other solutions that will directly
Impact.
the
Just
person down there.
imagine, outside your stage, border stage, those guys have circles. And if any new border comes in that circle, they will not allow him to sit there. They will not even allow him to park there. They will not even allow him to board a passenger or another person from there to another stage. Why? Because they have that relationship with their stage, with their people, with their circle. And at the end of the day, they save 1,000, 2,000, 5,000. And the queue, if I'm the one who has come early, I'm the first one to take the next passenger.
Right.
If the banking sector can customize the product to borders, when they want to come for a loan, when the school fees time has come, what do you do? For example, this is a school time era. People don't have money. The economy is going down. Yeah. The banking, if you apply for a loan, even if you have security, they will tell you valuation fees for the property. That goes to around 3 million.
Yes.
And when you go to other banks, they have specific valuers who are pre-qualified and shortlisted.
So they need to come up with customized solutions for their different
Segments.
clientele. Okay.
Border,
Yeah.
a lady at the market, Owino, up market, Garden City, office, Sarid Anna, directors, company, small startups, and multinational.
So
that's very, very important.
Okay, understanding their market. Okay, let's move to this other group of people who don't want to hear anything to do with banks.
Yes.
But they have money that they want to save, maybe grow and invest later.
Yes.
What options do they have?
First of all, there are different options. I'll start with the banking sector. The banking sector, as per the Financial Act or Bank of Uganda Act, they're all called supervised financial institution. And they're broken down from commercial banks, microfinance institution, microcredit, remitters, blah, 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 blah. That's one form. Another form which I would love people to take care of is SACCOs. SACCOs is growing up. When you go to Ministry of Trade, they'll tell you we have thousands of SACCO registered. We don't know how they're performing, but what we can do, what we really know from research, which is documented, is that most of these SACCOs are performing and they have impact. What people don't know is that SACCO, getting a loan from SACCO is easier, faster, and efficient. You can go today with your 5 guarantors, you sign, you get your money. That's where the SACCOs are beating the banks. The lead time for getting a loan from the bank, if you put valuation, blah, 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 will take you 14 days minimum or even
quite bureaucratic.
Yes. But for a SACCO, you're a member, you have your shares, you have your savings, your record talks, you get your money within 2 days, or some SACCOs is 1 day. That's one area. Another area is these people, like for the borders, they have the merry-go-round.
Yes.
Now, how do they want to save their money? For them, they are saving. If you, for example, you take 100,000 or 200,000, averagely, that's where most of us fall. If you take to the bank in a year, if you do roughly at 6%, 10%, it's 20,000 return on 200,000. One person will say, I don't need to put my money in the bank. I want to put it in a chapati vending, or I want to put it in a grocery. In a month, your return might be 50,000. That means if you have done your calculation very well, you can do 250,000 in a month, plus cumulatively on your principal.
Okay.
And most of that money, you don't even need to buy supplies. Why? You just walk across the shop, get your cooking oil, get your wheat flour, get your tomatoes from the lady beside you, make
And
your
your
food.
eggs, yes.
Those are the solutions For the person who has 200,000, I will not advise him to put the money in the bank and wait for 20,000 at the end of the year. And that's where business killings come in. How do you keep your books?
So look for quick wins.
Yes, you need to get solution. These people need to be educated that if I'm going to keep records, I'll track my expenses, I'll track my revenue. At what time do I make sales of chapatis? Obviously, during the day, few people will not want to be seen going probably to buy a chapati from Kafunda. But from around 6 going upwards, you will see those places, there are many people eating.
So what you're saying is SACCOs is a great place to be.
SACCO is a great place to be.
Merry-go-rounds, a great place to be. But once it's your turn to receive money, look for a quick fix on how you can grow that money.
Correct.
What other option do we have?
Other option is invest. I'm a proponent of, yes, if you do a small function of how to save, probably you earn X, you earn Y income, you have to consume C, it should be equal to your saving. My proponent to even staff, to even age mate is that you need to invest and save. If I have a million shillings now, and you go and save that money in a bank, or you go and save that money probably in a SACCO, I take that risk for me and I start a grocery shop. At the end of the year, I will have more residual income than you. What I'm advising the youth, the small money you have, first thing, check on your consumption. You've seen people earning 1 million or 500,000, graduates from university. Their startup salary is averaging 500,000, 350, 700,000. But where they stay, 600,000. That means you are staying, the food, the rent, the transport, it's all borrowed.
Schoolers today. So how much of my income should I save?
Now, that's where we go now to behavioral finance.
Yes.
The way your income is, and the way another person's income is, depending on the level. But when you're a startup, ish. But when you have reached a point like 2 million, 1.5 million, behavioral finance states that 20% to 30% should be on rent, fixed costs. 30% savings or investment.
30%.
10% on emergency. You have to put for emergency. A kid is sick, you have knocked somebody on the road while coming to work, you have got an emergency, a quick fix should be on your 10%.
Yeah.
Now, 40% should be on your consumption. Unfortunately, we are spending 110% of what we're earning. It's not sustainable. We are not living within our means.
But someone would argue that, okay, fine, I've graduated, I now have my job, I need to, look good for my job, of course, like you're saying, we're having a discussion, you're saying now there's a lot of pressure amongst the youth.
Yes.
In your first job, you want to get a loan and get that car, you want to look good, dress up well, you want to stay in a posh neighborhood, and you cannot sustain that.
You want to have a good car.
You want to have a good car.
Trending car.
Speak to them that are in that space, them that have just graduated and have their first job. What are their quick wins in terms of multiplying their income? Fine, as much as maybe they have 350. What can they save?
Now,
and where can they invest to have quick returns?
For graduates who have just finished university, the first thing you need to understand your profession. The first thing you need to invest in is your education and your profession. That's the first thing I will advise them to do. After investing, for example, when I finished college, university, my head was on masters. After my masters, my head was in PhD, CPA, CPS. I wanted to first invest in education. In that kind of a person, there's no formula that you have to invest 50,000 on X, and then your rent should be 100,000, blah, 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 blah. No. You need to know first what you want. That's the second decade of your life.
Yeah.
Between 20 to 30. 30 to 40, you need now to make use of your education. Unfortunately, the people who are in the second, they want to make money of the person who is 50. They're not patient enough. That's the biggest problem. If you interrogate the list of page 17 to page 63, you realize that there are probably people who wanted to open a bank account and get a financial card to get a loan somewhere. There are people who are not well educated. Why do you need a bank account? Why do I need to maintain a good credit record? They don't know. Somebody will just come, get a financial card, get 10 million loan, buy a car, and disappear. What happens? Your credit information or your credit records goes to negative. Now it's being shared. You cannot do it. People need to be told this. People need to be told that in the near future, even your rent, where you are paying rent, it's going to be connected to your credit card. Wow. People need to be told that if you're going to travel outside Uganda, you need a good record on your credit. That's the importance of having a bank account. Okay. And that's the importance of also knowing other alternatives. And that's where the bank needs to invest in. Sustainability on educating people and our population. Why do I need a bank account? Why do I need to invest, or why do I need to put my deposit in a bank account? And if I get a loan, what are the options to use this loan for? Okay. There are people in the informal sector who are doing billions of sales in a month, who can qualify on other facilities. There are different facilities in the bank. Letter of credit, contract financing, receivable of, quick loans if you need. Not necessarily these long-term loans. Yeah. And
have we left out any other options? So we have SACCOs, we have merry-go-rounds, we have quick wins in terms of investing.
Yes.
Have we left out any other options?
Obviously, it's investing in your family, investing in land, saving in land. The biggest savings you can do is land. Go to your village, buy land at 1 million, have a flexible payment terms, pay it within a year, instead of using that money to go to governor. Put that money there, pay it within a year.
Yes.
And you'll see your worth growing. And most importantly, know that I am not yet there. I am supposed to be in a rental house of 200,000. I have to sleep down. I have to dress like this the way I am. Don't dress like somebody who is 50 years, who has accumulated income.
Live within your means.
Live within your means. There are people, when they go to a restaurant, they give a tip of 200,000, worth somebody's salary. For you, when you go there, the next day you want to copy that. Live within your means.
Be true to yourself.
The best thing you can never do in this world, or you can do in this world, you cannot lie to yourself. Never.
Dr. Jeff Nyangenya, thank you so much for coming in studios.
It's my pleasure.
So as financial institutions, we have been schooled. We've been given solutions on how to best appeal to our clientele and remain in business. As individuals, you now have the options. In case you just don't want to hear about the word banks, you have options on where to invest your money. That has been it for the solutions segment. My name is Malaki Vilaodera. Take Note is up next, so don't go away. Keep it here.